Hey everyone, I'm Graham Cressy, Fintech Innovation Lab Director. Welcome to our Graduation Day celebration for Accenture's 2021 Fintech cohort. We are so proud of what our 20 Fintechs have achieved this year and of what's been accomplished within the lab overall. Delivering an accelerator program entirely remotely is no small feat, so we're delighted to be sharing the highlights with you today. I'd like to thank you, our audience of industry leaders, fintech mentors, commentators for being here today, and everyone who has been with us on the 3-month journey through the lab. You really have been a vital part of this process from start to finish, and we appreciate your continued involvement in making the lab a success. So, what an afternoon we've got lined up for you. As well as meeting our fintechs, first, you're going to hear from Accenture's Global CEO, Julie Sweet, followed by Jess Hallgrave, Chief of Staff at Checkout, the UK's most valuable fintech. Halfway through, we've got a brilliant fireside chat with Khalifa, OBE, the author of the UK government's recent fintech review, and Julian Scan, the Fintech Lab global sponsor, who's also going to be sharing his reflections on nearly a decade of the Fintech Lab. And finally, to wrap us up with an inspirational founder story, we are delighted to welcome Mark Mullen, CEO at Atom Bank. We want to ensure today's as engaging and interactive as possible, so please do use the chat functionality to introduce yourselves, voice your thoughts, and you'll also see that we've got Twitter integrated on the right-hand side for some live tweeting. So please do join the discussion. We'll be liking and sharing your tweets. We've also got a Fintech Expo and a networking section. So even though we're virtual, you can see and hear from our fantastic Fintech cohort firsthand, as well as meeting your fellow attendees. We're going to give you details on how to do that just before the break later on. Of course, you can also check out the Fintech microsites. They're included below. You can find out more on each of the Fintechs in the cohort. If you've opted into receiving the gift box, you can just scan the QR code. It'll take you straight to the microsites. We've also refreshed the Fintech Lab website, so please do check it out if you'd like any more information on the lab itself. Throughout the event, if you pause the video, you want to catch up, just click the Premiere button, bottom left-hand corner of your screen. And if you're ever facing any technical difficulties, just reach out to the lab team. We've got Celine, Robbie, Yulia, all here for assistance. They have kept the show on the road for this lab so far, and their contact details are available in the description just below the stage. All right, now to kick us off for today, we have prepared an introductory video that's going to set the tone, reflect on what we've achieved over the past year. We'll get that playing now. Enjoy it. I'll see you in a moment.
Welcome to our Fintech Innovation Lab Graduation Day, where vision meets value. Since our last grad day, our previous graduates have gone from strength to strength. CyberSafe have closed a $7.9 million Series A round and have secured deals with multiple financial services customers. Fintech Sandpit has built the first digital sandbox in Europe. In collaboration with the City of London Corporation and the Financial Conduct Authority, Hazy are working with Accenture to help us use synthetic data to speed up our testing and prototyping. In 2021, the Fintech Innovation Lab reassembled virtually to find the next generation of fintech leaders. After weeks of debate, scoring, and pitching, we selected a new cohort. Since then, our fintechs have been on a whirlwind journey with 17 hours of workshops, 18 partner events, and 79 hours with our business mentors. They have had the full Accenture ecosystem helping to refine their visions and introduce value into what they do. Get ready for an action-packed day where we'll network, hear from amazing speakers, and get to know the cohort. Thank you for joining us to celebrate the graduation of our class of 2021.
As you've just seen, our fintechs have definitely been through a journey in our online lab, so we're excited to celebrate them today. It's now my absolute pleasure to hand over to Accenture's CEO, Julie Sweet. She leads our 500,000 people globally as we seek to deliver on the promise of technology and human ingenuity and she'd like to personally say a few words on the Fintech Innovation Lab.
Hello, everyone. I am Julie Sweet, the CEO of Accenture. Thank you to our clients, honored guests, and Accenture leaders for joining us today as we celebrate the 20 graduates of our Fintech Innovation Lab in London. Now, to our graduating class, each of you joined our program as founders with compelling business ideas that have potential to make tangible and meaningful differences for the financial services industry. I admire the curiosity that you have shown to test the art of the possible and envision a safer, more productive, and more socially conscious way of doing business. You have approached your time with us with the intent to serve all stakeholders, and for that, I commend you and thank you. We also appreciate what we have observed and learned from you, from your passion to solve pressing problems in the industry and improve the experience for all customers, to your drive to build, move, learn, and iterate, all at a faster pace, to your entrepreneurial spirit and focus on value, reminding all of us to operate as owners of the businesses we support and run. As you graduate, you are taking the next step in your journeys at a pivotal moment in time. Here's how we see it. The pandemic has triggered the single biggest change in human behavior in the world's history, and in turn, has now triggered the single biggest reinvention of industry in living memory. Companies are no longer strictly competing for market share. They're competing to build their vision of the future faster than the competition. Success will depend on your leadership and your ability to understand your customers and employees, connect the power of technology, human ingenuity, and business value, and accelerate and master change in all parts of your business. And I have confidence, we have confidence, that you will be able to do so. It is our hope that over the past 3 months, you have learned much about value and have acquired deep industry insight from your Accenture mentors, our client and industry partners, and from one another. Accenture is truly privileged to play a key role in collaborating with the leaders like you who are reimagining the future of financial services. We take great pride in working with our clients to embrace change and develop innovative solutions to address the industry's most pressing challenges. And from where I sit, I can tell you that we need you, your ideas, your innovations, and your leadership. We also celebrate you for who you are. We're incredibly proud to have our most diverse cohort ever graduating today, with 40% women founders and 45% Black, Asian, and minority ethnic founders. At Accenture, we have an unwavering commitment to inclusion, diversity, and equality for all. It is not only the right thing to do, it is a central part of our business strategy. We have proven over and over again that a diverse business is a successful business, and that diversity is absolutely essential to innovation. And again, we need you, your voices, your perspectives. Congratulations, 2021 graduates, and I wish you all the best. Let me conclude by thanking everyone who has been a part of the journey to support and nurture these founders and our fintech ecosystems. I hope you are equally inspired by their visions for our future.
Thank you so much for that, Julie. We really appreciate your continued support. Next up, I'm very pleased to be handing over to our first keynote speaker of the day, who'll be presenting on the success she's been creating in the rapidly growing company that is Checkout.com. It's the UK's most valuable fintech and a pioneer of payments technology. Please welcome Jess Hallgrave, Chief of Staff at Checkout.
Hello, and thank you so much for having me here today. It's really an honour to be joining you for your graduation day. I've been fortunate enough to work in fintech for the last 5 years. Particularly when I was working in the crypto space, we had this phrase that crypto years were shorter even than dog years. But this really is true of all startups. Time just goes by so quickly that you can barely catch your breath. And I know for all of the companies graduating here today that the last 3 months will have flown by. But that's what happens when you're making history in real time. The companies that you were even 3 months ago are probably very different than the companies that you are today. On the back page of the Fintech Innovation Lab deck is a quote from the founder and CEO of OpenWorks, Ollie Betts. He says, "We've been able to carry out 12 months worth of market validation and proposition refinement within 12 weeks. In a world of increasing competition and an ever-changing fintech landscape, this acceleration of your time to market is a truly invaluable gift. And I have no doubt that you'll leave this program with a strong baseline from which to continue to iterate and refine your product market fit." For the last year, I've had the privilege to work as Chief of Staff for Checkout.com, a payments company based here in London. I'll talk a little bit more about Checkout in a moment, but first I should introduce myself. And Celine particularly asked me to talk a little bit about my journey to being the Chief of Staff at one of Europe's largest fintechs. I'm going to take you back to 2006 in my university application. It was just at the point of the financial crisis. And in my application, I wrote about how our financial systems, the operating systems of the global economy, badly needed updating. Then in 2009, when I was actually studying economics, shortly after the publication of Niall Ferguson's Ascent of Money, I took a class in economic history. It was probably my favorite undergraduate electives. From learning about Babylonian clay tablets to the Medici banking system, through to the gold standard, Bretton Woods, economics really has been at the heart of how our society has evolved, and it continues to be so today. After I graduated, I spent some time at Credit Suisse in their investment banking team, working on IPOs, M&As. I even did one of these SPACs, which are now so popular today. And after that, I joined the private markets investment team of a Canadian pension fund, where I was investing in private equity and infrastructure assets and funds. These opportunities provided a great training ground for me, but it was in 2014 when I learned about Bitcoin and blockchain that my interest, particularly in the technology part of our financial systems, really began. This was truly economic history being made in front of my eyes, and I was so keen to be part of the ecosystem. I began investing in the space and co-founded a small blockchain startup where we were using non-fungible tokens, NFTs as everyone's calling them today, to track the provenance of physical and digital artworks. It was very much a precursor to today's NFT activity, where even just in recent weeks, we've seen the first NFT sold at Christie's for a whopping $69 million, making both art and also crypto history in a matter of minutes. One of the biggest challenges back then, and still today, is how you connect the crypto economy with the traditional financial ecosystem, much of which, as many of you will know, is built on ancient technology. That's why when the opportunity to join Checkout.com came about, I was really excited to join their executive team. Checkout.com was founded in 2012 by Guillaume Poussaz, with a mission to provide global merchants with payment processing in a way that circumvents the complexities of the existing payment system. Our vision is that payments are at the nexus of financial services for every merchant. Rather than being an operational overhead, payments are an integral part of the value creation system and are the first step to unlocking a plethora of other opportunities for merchants, including payouts, working capital solutions, FX services, and more, which ultimately help them deliver a better service and experience for their end users. Our philosophy is that by owning the full stack of technology, over the long run will enable us to capture more of the value chain, but also to provide better data and more control to both us and our merchants. That's why between 2013 and 2016, we really focused on building our payments processor. In 2018, we won our first FANG customer, and also that's when we started beginning our global expansion program. So we started with a French EMI license and principal memberships in Hong Kong, Australia, and Singapore. And also, for the first time, accepted institutional capital as we did our $230 million Series A that valued the business at $2 billion. I think for us, it was a pivotal moment for the business. We'd been profitable for a very long time, but this was about bringing deep expertise and partnerships through our investors into the business. We then, in 2020, raised both our Series B and our Series C. But 2020 was also a big year for other reasons, for many of us. It was a period of rapid growth and also change for the organization. We've long believed in the trend for online payments, and this only accelerated during the pandemic. It's of course aided by other systemic shifts, including changing consumer habits, online purchases in e-commerce, and also a reduction in cash, not so prevalent in the UK fintech ecosystem, but certainly in other regions of the world where we operate today. It meant that during 2020, we onboarded 500 merchants and saw processing volumes triple. It's also in this period that we saw a real mind shift across both our new and existing merchant base. From thinking of payments, and indeed other fintech offerings, as part of a cost base, to really thinking about them as a way to generate new value. For me, I kind of think in the way that we used to talk about an internet business, and now the internet is really core to almost all businesses, so too is financial infrastructure. It's heading that way, and it's becoming part of the core operating system for any business. At Checkout.com, we power many of Europe's fintech companies like Revolut, Klarna, and Wise. And today we're more focused than ever on being an enabler for that innovation. And it doesn't stop just with fintech companies. Increasingly, chat apps, social networks, and other more traditional businesses want to embed financial services into their offering for their end consumer as part of what we call connected payments. Together with these companies, we're really trying to rethink what fintech means, both for the merchant and for the end consumer. But this innovation is only possible with really open-minded partners, ones who'll invest time to explore creative solutions, and ones who are okay to take risks, knowing that not everything turns out perfectly in the first instance. And it's these partners with whom we've worked over recent years and who we've been able to unlock incredible value for. And I really hope that over the course of this program, many of you have also found partners, ones who'll challenge you and test you, but also ones who'll back you and innovate alongside you. If you haven't found them yet, then obviously the network session is the place to keep finding them. But these people, these partners, and this melting pot of experience, education, and entrepreneurship is really where history, and the history of fintech particularly, is being written today. Some of the partners aren't always the obvious ones, and in our experience, it definitely takes a village to raise a fintech. It's the regulators, the banking partners, the B2B technology providers, the investment community, and of course, incubators like this one that make success possible. Having a large group doesn't always, however, mean that you have a diverse group. And one of my first questions to Celine was about the diversity of this cohort, and I was really thrilled to hear that 40% of the group is represented by women. Diversity, and not just visible diversity, but bringing together people with different mindsets, different imaginations, and different backgrounds is crucial to reimagining the financial systems that we have today, which ultimately don't work for everyone. So if I can leave you with one final thought, it is really to keep challenging that status quo. Only by bringing new people into the ecosystem and working in partnership can we innovate in a way that will work for everyone. And if you can do this, whether you're an investor, a 100-year-old financial services business, or a startup at the very beginning of your 100-year-old journey, you'll be the ones that are writing history together. As you graduate, you are joining an incredible group of alumni who are changing the financial world, and I wish you all the very best as you join them.
Thank you, Jess. What a brilliant story and a source of inspiration for our cohort. The Fintech Innovation Lab prides ourselves on the high quality of fintechs that we support each year. Today, you'll see who's been in the lab and hear pitches from a select few of them. As a reminder, remember that by using the Expo functionality, you can talk to any or all of them during the Expo sessions. So, to lead us into the first fintech pitches of the day, you're now going to hear from our first streams, data and emerging tech. First up it's The Data Stream, hosted by Ed Broussard, founder of Medano and part of Accenture Analytics.
Data is the fuel of the future, powering business decisions and facilitating a fundamental shift in how we all live our lives. With the help of fintech, the financial services sector has embraced data, enabling a step change in how they serve their customers. Hear from our founders. Why is managing your data a fundamental pillar of success?
Hi, I'm Dave Van Bruin, CEO and co-founder of Fairly.
My name's Jason Lee and I'm the co-founder and CEO at Illuma.
For successful decision making when using machine learning, it's crucial that the machine learning systems are trained on high quality data. Data represents people's lives, and so it is absolutely crucial for banks to get this right.
Well, data underpins analytics globally. However, the influence of human judgment is ubiquitous within most data sets, but humans are known to be suboptimal decision makers prone to inherent biases. So therefore, analysing such biased data leads naturally to biased business outcomes. So it's really imperative that you manage your data and its inherent biases to create both better business outcomes and comply with global regulations on discrimination.
Success with data management allows you the full 360-degree view of your business, past, present, and future. Amazon and Google, how data has helped them build the most successful businesses on the planet.
What about your organisation? Is managing data a fundamental pillar of your success?
Hey everybody, I'm Ed Broussard. I'm the sponsor of the Data Stream and CEO of Medano, Accenture's data-led reinvention business. Data has always been a huge part of the fintech sector, and over the last few years we've really seen a pivot across financial services to running big transformations to truly drive towards becoming data-led businesses across the sector. And this year's lab was all about fostering new solutions really to solve financial services' biggest problems. I'm hugely proud of the data stream, and we've had an incredible cohort of businesses come through the lab this year. So to get us started, I'd like to hand over to the first fintech today. Welcome, Freda.
Hi, I'm Danielle Lawrence, the founder and CEO of Freda, and we free your data. We take trapped, unstructured data from documents and transform it into actionable insight. Our clients are asset managers and banks who employ armies of analysts to manually read, extract, and interpret millions of complex financial documents to inform decision-making. This antiquated process results in a number of challenges. We often see a significant drain in time and resources, high operational costs, a lack of scale as the business grows, and suboptimal decision-making from constrained data access. And as the world shifts to a data-driven economy, it's no longer acceptable for your critical data to remain trapped in your documents. Freda is a cloud platform that automates manual data entry using AI. We're different because we specialize in complexity. Unlike legacy OCR solutions that can extract, say, a 2-page invoice in 10 fields, Freda captures and interprets thousands of untapped data points from large, complex financial documents, agnostic of layout and without templating. The outputs can then be used to better understand investment positions, leverage loan portfolios, and risk profiles. You can also take a greater look at your ESG data. By improving transparency, our clients can better serve their customers and stakeholders. Freda's intuitive interface allows you to see where your data came from to a granular level and exactly where it appears in the source document, with full audit of uploads, edits, verification, and exports. Uniquely, we share real-time performance and accuracy of the platform for full transparency and accountability. Our technology was developed by 4 PhDs, and we've been recognised by Innovate UK, the UK's innovation agency, for our work. I'm proud to say that we're the recipients of not just one, but 2 Innovation Grant Awards. Our mission is to help clients to become hyper-efficient in how they approach data capture, transforming operations from costly typing pools into high-impact analysts, free to focus on data-driven decision-making, improving profitability, and reducing human error. With the help of our technology, our clients are already seeing tangible results. Back and middle office teams can increase productivity by 25%, helping them to process data up to 10 times faster than manual methods. Freda processes thousands of documents in minutes instead of days and weeks. Tasks go from manual form filling to automated form checking. And that enables you to become more scalable. You can reduce operational costs by over 1/3 with best-in-class automation. Our dashboard gives you real-time transparency over your savings, giving you the ability to see tangible results, achieve market-leading ROIs, and accomplish lean operations. Want to maximize your returns and reduce human error? Freeing your data allows you to achieve your objectives effectively. You can easily spot anomalies. We have full transparency for audit, and we seamlessly integrate with your existing tech stack with our API. With a focus on insights, you can say goodbye to obscure data and hello to smart investments. By unlocking your data, you can improve decision-making and harness the power of your data. Our vision is to free your data so it can fly. Freeing your data means delivering transparent, swift, and accurate insight to solve your critical business needs and unlock your competitive edge. Before we joined the lab, we were asked to share our goals, barriers, success metrics, and expectations for the lab. Our goal was to build the right sales strategy and to build the right product. Our barriers were a lack of access to large enterprise clients, and our success metrics were to secure new pilots and refine our product roadmap. And finally, our expectations were to receive impactful mentorship and candid feedback to accelerate our growth and help us to achieve these goals. At Freda, the lab really surpassed our expectations and allowed us to step into a truly collaborative space to learn, exchange ideas, and accelerate our growth journey. With the support of Accenture, the partner of financial institutions, and the business mentors, we were able to refine our product roadmap and our go-to-market strategy, engage in pilot discussions with partner institutions, and better understand how we can scale from here as a business. So, if you want to free your data for consumption so it can fly, let's continue the conversation.
So I'm intrigued, what is Freda's USP? I mean, there are in-house tools there that tackle the same issue in financial institutions. What makes you different?
Financial institutions who take a build-it-yourself approach typically lean on open source libraries or perhaps the tech giants whose capabilities really are primarily designed to be used by firms that can then leverage them and build on top of them. To take a simple example, in this case, if you use a turnkey capability around OCR for extraction of fields or tables from a PDF, then it will either not support any extraction, leaving you with raw text, or by necessity use a very generic approach. And that means it works great on specific and single examples, but if it doesn't, then there's no way to change that, requiring either a workaround or to just accept a less accurate output. So having tested those sorts of capabilities ourselves, we've really not found anything out there that wouldn't require significant workarounds, specifically within financial services. So the alternative approach is to train a model, and with all that involves on the data science side, test it and continue to evolve it. Assuming success, it's the first step in a process of several stages that considers the document in terms of layout and language before you map it to the business domain. A key difference between that and Freda is the flow and process has already been put together, ready for adoption to use cases in the financial services domain. In fact, the adoption and training cycle process becomes a managed process requiring a less specialized skill set and time on the client side, whilst also benefiting from domain experience and technology implementation that would span multiple organizations.
Brilliant, thanks very much, that was great. So without further ado, let's move on to the next FinTech of the day, Sas Global. Take it away, Josh.
Hi, I'm Josh Gilbert, co-founder and CEO at Sas Global. We see that climate change and climate risk are now financial risk. Capital market actors and insurers are seeking ways to understand these types of complex risk and integrate them into meaningful operational workflows. So at Sas Global, we transform this complex climate data, including frontier climate science, satellite and geospatial data, and we process it via our machine learning algorithms into quantifiable, transparent, and validated data for financial institutions. Our vision going forward is to be the invisible middle layer, enabling capital market actors and insurers across the financial institutions and financial space to be able to quantify and mitigate the accelerating impacts of climate on their tangible asset portfolios, as well as then branching out into equities and securitized products, as well as more broadly integrating other types of data, for example, sustainability data, including social and governance, and then being able to actually, in the long term, be able to start really making these type of integrations into meaningful opportunities within these banks. The lab experience has been an amazing one for us. We started the program effectively as a group of data geeks and data scientists, learning how to translate complex climate data into a transparent signal, but we really didn't know anything about the financial institutions themselves. So if you're working in this program with the mentors, the banks themselves, the insurers, and the Fintech Innovation Lab team, we've been able to understand more deeply exactly where the immediate use cases are, as well as the long-term opportunities in terms of integrating this type of climate data. Today, we've been validating this data through a web analytics dashboard, allowing companies to scroll in and out, to look across their portfolios of tangible assets and understand at the specific individual asset level exactly where the exposures lie. So by being able to point and click, scroll through this data, aggregate and sort it in interesting ways, it allows them to get this level of understanding and trust in terms of the data that we're supplying, the inputs that we have ourselves, and then the outputs that we're able to provide. So through this process, we get the trust built in, and then we can provide this data via an API integration. So we've been going through that process, really understanding where in the product line we sit. So whether it's as a set of capabilities, as a platform, or as a product itself. And I believe that Sas Global can become all three of those, but really it's about sequencing those steps in the right order. And the partners and the mentors in the Field Lab have really helped us to do that. So yeah, the lab's been great. We've been really excited with the process. We've made loads of great engagements as well as friendships that are going to go beyond this lab, and really looking forward to what the future holds. So in summary, at Sas Global, our vision is to enable financial institutions, whether they are capital market actors or the insurance companies themselves, to embed climate risk into their operational workflows. Sas Global can enable them to do that by providing a modular, customizable, frictionless data layer that's validated and really easy to understand and integrate into operational workflows. We see that by providing these building blocks, we can enable institutions to create their own financial products, services, and solutions around climate, which on our own, we are unable to do. But together, we can make a meaningful transition towards sustainable finance and a greening of the financial system. So if you want to talk more to us, I'd love to hear from you. You can reach out to me directly at my email, which is josh.gilbert@sasglobal.com, or through the team, through the Field Lab. It's been a really enjoyable experience, and we can't wait to see what the future holds.
What role will new climate regulation play in driving demand for your solution?
Regulations are going to play a massive part in driving demand, but they're only half of the problem. So it's great to see initiatives like the TCFD, which is the Task Force for Climate-Related Disclosures, and the NGFS kind of bringing banks and insurers into this way of disclosing their climate-related risks. Currently, these approaches are non-mandatory, meaning that there's a huge amount of signatories on these programs, but there's very little in terms of real mandated standardization within these programs. Obviously, when they become mandatory, it will kind of create this baseline, and it will certainly be a good driver in terms of shareholders will know about these types of initiatives, and regulators themselves will be able to really clamp down. We see this regulation as really important, but it's only really part of the problem, because I think regulatory push can only do so much, but actually we recognize a massive market pull around enabling these types of climate-aware investment solutions. So, whether that's shareholders themselves asking for these types of strategies, whether it's the consumers or the investors who are saying, compared to regular portfolios, how can we know that this is a climate-aware and sound investment strategy? So I think with the regulation coupled with the technical opportunities in capturing the shifting consumer demands, we see that these two drivers being a massive, massive accelerator in terms of driving climate-aware investments throughout the capital markets and insurance spaces.
Excellent, thanks. Another great presentation. So hopefully you can all see that the future of financial services is really data-driven, and fintechs are going to be a huge part of driving us towards that future. So thank you to the data stream, and I'll hand this off to our next stream, Emerging Tech.
Emerging technology is at the precipice of changing everything. For financial services, this transformation and disruption is being pioneered by fintechs, who bring challenge and fresh perspectives into the conversation. Hear from our founders. How are emerging technologies reshaping the world?
I'm Cindy, founder and CEO of Amazi.
I'm David Washell, CEO and founder of Responsive.
Hi, I'm Asaf. I'm one of the co-founders and the CEO of Granulate.
Emerging tech are changing lives and will continue to do so. Quantum computing, for example, is expanding the driverless car market and optimizing traffic flows. Some other real-life examples is crypto, where in Nigeria people don't have access to be able to open up bank accounts, and is actually being used as the real currency in Nigeria.
As much as emerging tech has the ability to create client-centric financial services, the challenge is we are stuck with a manufacturing and distribution paradigm. From my perspective, the way forward is to think about how our human roles are changed or impacted by AI, and to design new roles for our frontline workers.
I think what we're seeing throughout the industry itself of the startups is that new technologies can always bring us the ability to innovate faster. It takes a lot of labor, manual labor that we used to do in the past, and relieve the manpower to work on innovation, create a huge amount of value for the organization, and right now simply allowing us to take the organization into the future.
What about your business? How are emerging technologies reshaping your world?
Hi everyone, my name's Orla Baker, and I've had the pleasure of being the Emerging Tech Stream sponsor as part of the Fintech Innovation Labs this year. This stream, as ever, gets stronger year on year, and I'm super excited about the different technologies that we've had through the labs, and it's been a pleasure to work with all of our teams. I'd like to introduce our first Emerging Tech Fintech for the day, Stoic, who represent the best of how new technology is bringing excitement to the fintech world.
Hello, my name is Ishmael Galimi, and I'm the CEO of Stoic. We do a data citizen workbench which accelerates the process of going from vision to production for data-driven innovation. Well, that's a mouthful. Let me explain what that is. Users love their spreadsheets, but they do not really scale with big data. They do not offer the right level of governance, and they really do not take advantage of the cloud. So what we built is the first data citizen workbench that can scale to terabytes and beyond, can be used for the most sensitive data, and can be deployed on any cloud, be it a public cloud on Amazon, Azure, or Google, or your private cloud. This is a fairly ambitious vision, and the only way for us to bring it to reality was to engage with a few carefully selected design partners, such as HSBC and Citigroup. And we worked with someone who understands spreadsheets really well. His name is Paul Maritz. He's our main investor, chairman of the board. He's the executive who built Windows and Office at Microsoft between 1985 and 2001. And as part of that work, he built Excel. So he knows how Excel works and what makes it really work and stick with end users. And 8 years ago, Paul and I decided to start Stoic together to sort of give it another look and see what we could do in that area. What we built is a product that kind of feels like a spreadsheet but behaves more like a database. And it's designed to be used by anyone in the team, not just the more technical users like data scientists and software engineers, but also your traders, risk managers, finance people, any business analyst who knows how to use Excel is a good candidate for using Stoic and getting a ton of value out of it. You can think of Stoic as a product that integrates into a single user experience the core features that you find typically in your data preparation tool, your BI tool, your data visualization tool, your AI notebooks, as well as your spreadsheet like Excel and presentation tool like PowerPoint. And we bring all these features together into a single integrated and enjoyable user experience. The benefits are quite obvious. It helps you lower costs, give you better and faster insight. It simplifies the process of getting governance with your data, and it gives you much better data lineage and data provenance because everything is done in the same place. This is the kind of interactive dashboard that you can build with Stoic without having to write any complex code. If you know how to write Excel formulas, you know how to do this type of interactive dashboard and gorgeous visuals. We're the first product to implement the new visual vocabulary developed by the Financial Times, making it a lot easier for users to select the right visualization for the data set they have and the story they want to tell. That product can be deployed in two ways. You can run it with a server, that's what we call the cloud edition. You can think of it as the back office version of the product, but you can also make it available to your clients and partners through what we call the client edition, which is a progressive web app that runs in the secure sandbox of your web browser and therefore is even more secure than sending over a PDF file or an Excel document. Our go-to-market strategy is really twofold. On one hand, we have a top-down strategic business development process where we engage with the market leaders, companies such as HSBC and Citigroup, who are not only design partners, but more often than not strategic investors in the company. And we work with them to deliver the absolute best user experience that we could bring to their users, both internally to the company as well as externally with their clients and partners. At the same time, later this year, most likely in Q3, we will make our product available to the general public with a very bottom-up sort of word-of-mouth marketing approach based on the core strength of the product. It's a really, really cool product. It's fun to use. It sort of gives you superpowers as an end user. And when you realize that, the first thing that you want to do is share it with all your friends. And we're really going to take advantage of that. Our participation in the lab was to understand the kinds of use cases that this product is really good at, focus on them, identify the unique selling proposition, and prepare the work for creating templates that we could deliver to multiple vertical industries. The first one being reporting for or client reporting within the prime brokerage business of the banks. We're very excited by this opportunity and look forward to working with you to bring it to market. Thank you very much.
Well, thanks. That was great. Stoic's technology is clearly awesome and it solves a range of problems. You narrowed down the use case to prime brokerage. Tell me how you got there.
You're right. Stoic is applicable to a very broad range of use cases, but we can't really boil the ocean. So we've got to pick one and be really, really good at it. What we've picked, generally speaking, is reporting. And in reporting, one particular form of reporting that we find really interesting is client reporting within prime brokerage. And we find that interesting because on the back office, you need quite a bit of data and computation to be handled. And on the front office, you need to deliver a very engaging user experience to your clients. The more interactive you can make these client reports, the better. It will help you sign more clients or retain them more easily. What's also interesting is that Stoic is the first reporting tool that is designed as a progressive web app that runs entirely within the secure sandbox of your client's web browser. So it's even more secure than sending them a PDF file or an Excel document. And yet it can be highly interactive, and that allows your clients to merge your reports with their proprietary data without any kind of IP leaking back up to you. And if your clients are very paranoid type hedge funds, that can be a pretty compelling story. Not only that, but we can allow the prime brokerage business to make this capability to their clients, be they hedge funds or large finance departments, available at no cost to the client. So there is a very nice way of exposing Stoic's goodness to a wide audience and allowing us downstream to upsell to these customers. That's why we picked prime brokerage as sort of our first use case. It has an element of virality that is very hard to resist.
Thank you, Ishmael. As always, it's an honour to hear you present. I'd now like to pass on to our second emerging tech fintech for the day, Hamza from Hubble.
So hi everyone, my name's Hamza. I'm one of the co-founders of Hubble. Hubble essentially helps teams find errors within their data. Whenever things go wrong inside companies' data warehouses, we help them find those things. The problem really came from our background. So I come from a software engineering background, and Oliver, my co-founder, as a data scientist, where we previously worked with some of the largest investment banks and insurance companies, trying to help them drive some of their data science projects to try and really leverage the power of all the data that sits inside these organizations and try and make some sense of it and make it useful for them. But essentially what we found time and time again was that teams were falling over and stumbling on these projects because of some of the simplest things that had to do with their data. It could be something really small and really simple, like missing data or data that was going stale, or it could be something far more complex, but it was always hidden and really hard to find and incredibly frustrating. And when you add up all those things in aggregate, it means that you're left with a data set that you just can't trust. And what we found is that increasing trust in data was so important to helping these teams fulfill their desire to be really, really data-driven companies. So coming from a software engineering background, I'm spoiled for choice in terms of the tools that I use. And there's also an incredibly diverse set of principles that govern how we build and manage software. And so when we started working on Hubble, I really brought the same principles of software engineering to the world of data, and we thought about what is the right way to build a set of opinionated products that really help teams be data-driven and build something really resilient in the same way that you would when you build and launch a piece of software. And that was really the genesis of how Hubble started. And it's about empowering data teams to make them self-serve and to allow them to figure out exactly what's happening with their data at all times. And not just that, but also help them fix problems when they arise. And that's what Hubble does today. It connects the data, it learns the shape of the data, not only the simple things like what the schema looks like and what's sitting inside the data set, but also the semantic relationships inside data sets and the data context. It tracks those things automatically, and then it starts to let teams know when things break or when they go wrong. What this means is that all the sort of manual data verification and data controls gets replaced by a single automated tool. And for most teams that we've worked with, we found that it reduces their data verification and data quality workload by over 50 or 60% by the reduction in the number of manual controls that they have built on top of their system. This is really powerful because it means that any other thing that you're doing that uses data, whether it's day-to-day operational reporting, so think about someone who's putting together a dashboard for the COO's office, all the way through to a data scientist inside a company that's trying to build a new model based off internal data, being able to know that the data they're using is trustworthy and up to date ensures that anything else that you build on top of it, is going to be right all the time. And actually, one of the ways that someone described this is Hubble allows people to differentiate between what is a real data insight versus what is just a bug in your data, which previously is often a really manual and laborious process for teams. And our vision for the future of that is that we really want to make teams as data-driven as possible. And that's really what we're super focused on. And we're starting by building trust, by ensuring that data at its most granular level is always correct, always up to date and never missing. And that's really where we see this moving to in the future as people expect and demand more from the data that they're storing and capturing.
making sure that it fits those criteria is going to be more important than ever. Our time working in the lab has been super critical to shaping that vision and understanding more about the roadmap to get there. We've got to work really closely with teams across major retail banks and insurance companies and actually understand what their problems are in really granular detail and try and nail down a couple of really important use cases that affect these teams. And we've looked at things like data governance and reporting, as well as helping teams look at things like cloud migration, so moving to new technology stacks and understanding how data observability and data resilience is so important when you're building those sorts of tools. The Accenture team has been phenomenal in helping us get there, pulling in folks from around the business and helping us tailor exactly what we need to figure out which of those use cases were the most important to start with, and then bringing the people into the room that we needed has actually helped us iterate the product faster than we ever thought, to the point where we launched a new version of the product while we were in the lab from the ground up, which is a testament to the amount of feedback and positive response we got from the folks at Accenture and from the Fintech innovation team.
Financial services firms have huge amounts of data. How do you see Hubble scaling to that level?
So Hubble was really built to be scalable out of the box. Its unique architecture of actually running inside a customer's environment rather than require data to be sent to us and held by us really means that it's infinitely flexible to increasing amounts of data. This is really unique and really, really different to most other solutions today, in that we don't ask teams to send us their data. This has two really big benefits. The first is it means that you don't have to send your data to another third-party provider, but more importantly, it means that it provides infinite flexibility regardless of the complexity of an internal data stack. So it means whether you're using a legacy system on-premise or you're using the latest cloud services provider, it's equally as simple to connect and really scale out the technology. On the actual data tracking and testing side, this means that the Hubble system actually learns more each day from the new data and monitors that teams set up. So the product is essentially constantly improving itself and its ability to handle more varied data types and data sets. So that network effect is really, really powerful for us, and one of the driving engines behind why Hubble gets so good at being automated so fast.
What a great presentation. Thank you so much. And thank you to everyone who's been involved in the Emerging Tech stream this year. As you can see, Emerging Tech is really driving change across the world. All right, I'm now going to hand back over to our Fintech Innovation Lab host for the day, Graham.
Thank you, everyone. Fantastic speeches and pitches, and thank you, Ed and Orla, for sponsoring this year's Data and Emerging Tech streams. We're now going to head into the networking and expo session, and also a chance for a quick break. To meet any of the fintechs this year's lab, please head over to the expo section on the left-hand side. You'll see all the fintechs waiting in their booths. Just click on their booth and meet them directly. If you'd like to read more about them first, of course, please check out the Fintech microsites. We'll post those in the chat, and we've also included the links down below. If you're interested in meeting your fellow attendees, just click on networking. That's on your left-hand side, and you'll be paired with fellow attendees also curious and keen to chat. We're going to regroup here at 2:30 p.m. sharp, so meet those founders, chat to your peers, stretch your legs, and we'll see you back ready for Khalifa, OBE, and Julian Scan, our global FinTech Lab sponsor. They're going to be talking about the past, present, and exciting future of FinTech. See you shortly. Welcome back, everyone. Hope you had a good break and took the chance to make some great connections. If you didn't get a chance to meet some of the fintechs, we'll have the expo open again at the end of our final keynote. That's going to be Mark Mullen, CEO of Atom Bank. For now, we're going to launch into the depths of fintech in part 2 of our agenda. Julian Scan, our global lab sponsor, is sitting down and having a fireside chat with Ron Khalifa, the author of the recently published Khalifa Review. It's an independent report that was issued by the government to examine how Britain can remain at the heart of the world's fintech scene. That is absolutely something that's close to the hearts here in the lab. So, over to you, Julian.
Very good. Hello, everyone. My name is Julian Scan, and I'm delighted to be joined today for a fireside chat by Ron Khalifa, who led the Khalifa report into fintech. And Ron is going to give us some insights into the report and the wider financial institution market. Just before we ask Ron to come in virtually, I wanted to reflect a little bit on the 10 years or so of the fintech program in London. This is something that I've sponsored from the beginning and been delighted to do so within Accenture. The program started, as many will know, in New York. We ran it in London the year after that, and then Hong Kong a couple of years down the line. And we've got upwards of 240 graduates from the program who've raised in excess of $2 billion. And the success rate of these companies is materially better than the normal success rate for startups at the point we picked them up. And I couldn't be more honoured to lead this on behalf of Accenture. The context, of course, of the market 10 years ago and what fintech meant was completely different. We didn't really think about cloud as a viable part of the banking market. We hadn't seen, depending on the market, 20-30% of revenue loss from the incumbent financial sector to new players, and we hadn't envisaged of the extent to which the Asian market would present an integrated view of meeting customer demands, which really sets the new environment for how financial services will work in many people's opinion. And yet somehow the program in London, which had as an original aim to bring the industry together with the new tech to make scale-ups happen, that is still relevant. And that is a surprise because we never really saw this going beyond 2 to 3 years. Every time we ask, people say this is still adding value. So I'm absolutely delighted about that. The thing we need to do as part of the Fintech Innovation Lab is really highlighted by the Khalifa report itself. Although the lab only can aim to contribute in execution to part of that agenda, it is a very real contribution looking forward that we must make. And I'd say the banks and the insurance companies who give their time in the 3 cities, I would challenge you to think more ambitiously about how quickly you get this tech to market and how quickly you scale it. I would challenge you to think more international, because the big challenge to increase the value for any country, including UK PLC, is to get the fintech to punch above the weight of the domestic market and to fill that Series B gap that was highlighted in the report. And the banks are well positioned to do that, but I think more aggression in terms of cutting through the red tape to get the solutions out there is needed and to get them to scale. I think professional services firm like Accenture's and tech services firm have also got to step up further and put more risk capital in the game themselves in developing the solutions and helping banks syndicate some of the costs of running fintech up to scale. And I think, finally, it is also important that the Fintech Lab itself, as part of that ecosystem, addresses the new balance sheet fintech, let's call them, the Stripes and the Adyen's and the Klarnas, and indeed WorldPay, and not just work with the incumbent sector, because the fintechs that started up 10, 15 years ago as balance sheet fintechs are now very much at scale. If I switch just for a moment to something else I wanted to put on your agenda, which is the topic of purpose. Accenture released a report this time last year, our first report on purpose in banking, which put forward the theory that purpose was tremendously important. It's not just tremendously important because there is a need for people to understand financial services better and to be helped to be better with their money, but because that is a viable strategy, in our opinion, for differentiating yourselves in what is a very crowded market now. We showed a correlation between bank success and a real focus on purpose. And in the midst of the pandemic, we backed that up with a B2B and a B2C survey, which reinforced a couple of interesting things. One, that actually the sense of trust has dipped in some segments in some markets towards banking suppliers in particular. And secondly, that the need coming out of the pandemic for the focus on purpose was even more important. What we're releasing next week is the next installment in this, which brings more data around the case for purpose in an economic sense and the case for investing with purpose in the core banking products as a differentiator, and it uses a purpose-driven index using Arabesque as a trust score, backed up by quantitative measures for both customer service and other aspects of product design, that aims to help banks to use quantitative-based thinking for making investment choices and to put purpose at the front of that. So please watch out for that, and all feedback is welcome. With that, let me ask Ron to join me virtually. Ron Khalifa has been an executive at the top of the banking industry for many, many years. His most recent post has been as CEO of WorldPay at the time it was set up, and then vice chairman of WorldPay for the last few years. He was asked by HMT to lead the Khalifa report, and he laid out in a very ambitious way a very wide-ranging set of challenges and issues that needed to be dealt with, and was what a very comprehensive report. So I'm delighted to be joined by Ron. Welcome.
Great to be here.
Good stuff. So I mean, let's just kick it off. As I said, the report covers strategy. The report covers execution. There's an awful lot. There's a very wide range of a call to arms. What do you think is the most significant thing that the UK financial services industries have got to do?
Yeah, Julian, it's a great question. I think we need to, for one reason or other, we need to stop thinking about fintech as something that is separate or a subsector of financial services. It's very much, I think, the future of financial services. Fintech is as close to technology as it is to financial services. And fintech increasingly is not about a group of people, startups who are based in Shoreditch playing on an iPad. Not only do we have some great fintech companies in the UK, including unicorns such as TransferWise, or Wise as they're now called, Onfido, Checkout.com, Revolut, we're also seeing, I think, and witnessing the digital transformation of banks, of asset managers, of insurers, as they strive to meet the changing consumer and business demand. So I think the review was trying to ensure that we can continue to lead in this technological revolution. And I've tried to do that through, as you say, identify and define a strategy and a delivery model for a sector that I think is growing rapidly. It's going to grow threefold or so over the next 10 years. And the review set has been worked through 5 lenses. Those lenses are policy and regulation, skills, investment, international competitiveness, and national connectivity. I think the good news is that we have a really strong record in this space. UK fintech represents 10% of the global market share, and 2019 contributed £11 billion to our economy. There are many factors that I think help us. One is capital is strong. Investment into fintech stood at $4.1 billion in 2020, well ahead of our European counterparts, and frankly second place only to the States on a global basis. The other thing that we've got, which many of people watching this and your clients will be familiar with, is that our combination of financial and technical talent is unparalleled. And we've also set the benchmark for policy-led innovation through key initiatives such as the FCA's regulatory sandbox, open banking. It's interesting, at least 50 countries have now replicated our regulatory sandbox. When we first launched it in 2017, we were the first, and now 50 countries have got that. So what the review is trying to do is to build on the success of all of these things and achieve more. So that's what I think, where some of the challenges are.
And I'm conscious in executing across those 5 domains, you're asking for a lot of government support and action by existing industry bodies on the skills agenda, in terms of the visas, in terms of accelerating standard setting and so forth. Things which have traditionally taken a long time. What sort of buy-in have you got, or do you think or how will you get it across such a wide group of agencies?
I mean, the report's been worked on now for about a year. So we've been working closely with different government bodies because everybody has an interest, a passion, an enthusiasm for it. So the report went in a couple of weeks ago, and it's a bit like writing a letter to Santa. So you write the letter into Santa, then you have to wait for Christmas Day for the presents to turn up in one form or other. So I think we're in that sort of interregnum at the moment when the Chancellor, his officials, the Economic Secretary of the Treasury are considering the report. There's a lot in there. And I suspect that they'll come back to us in the next couple of weeks, the next few weeks, and then tell us what they like and what they're going to help us with. I've tried also to make sure that I'm not asking too much of government in terms of regulatory change or things around equivalence or any of those aspects. I've tried to focus it so that the work is principally done in the private sector. But government helps by convening and unblocking some of the opportunities that are really there. There's been some very positive reactions, as many of you will have seen, around the tech visas, the talent pipeline that I identified. There's been some work that's already been done as it relates to the public listings. So I think the momentum is there, and it really is about looking at it not as a set of recommendations, but as a strategy, what needs to happen for the sector.
And do you think there's anything, did you find anything where, we're not doing it right? I mean, necessarily it's a very positive report and there's a lot to be positive about, but did you find anything where we should stop doing?
Not necessarily stop doing, because I think, as you say, we're doing some great things. We've started from a fantastic position, but we've sort of got there by stealth and just determination. It's interesting, as I've talked to different geographies and different markets. I've talked to Australia, France, UAE, Singapore, Canada, etc. And when I asked them, what is it that you're doing or they're doing as it relates to a fintech, they all gave me exactly the same answer, which is we basically watch what you do in the UK and we copy it and we do it with real force and momentum. So I think we just need to make sure that the world isn't standing by because people see the opportunities as it relates to fintech. But one area that I think we in the UK have got to get better at is scaling capital. In the UK, we don't have a problem with startups. We have a problem with scaling up and helping businesses to really achieve the opportunities that are in front of us. It's a pretty well established fact that there's a growth capital funding gap in the UK. It's actually across Europe, but it's particularly so in the UK. And this was identified as part of the British Patient Capital Review many years ago to fund, and the BPC was set up to fund venture firms to fill that gap. Great initiative by government, but it was using government money. What I've been trying to think through is how do we get private money so the government isn't being asked for anything else to come and help fill that gap. So it's taking some of the lessons from the creation of the Business Growth Fund, which was set up 10 years ago, challenging and at a very different time, different crisis, but to take some of those lessons and find a way to work with industry as to how to stand up a growth fund that helps companies and businesses grow. But it has industry participants as shareholders, insurers, pension funds primarily. But with the government helping in a couple of ways. One is to create some convening power, inserting some influence to make this happen. And the second is to look at the regulatory obstacles that currently prevent our domestic insurers and pension funds from investing in growth companies. There's a lot of work that's already going on, but that's the sort of things that I think need to be done which are significant will actually make a difference to the broader agenda and the broader opportunity that we've got in terms of in the sector.
If I just built on that, and your point you made at the very beginning was this is largely about technology. Now, the way technology has scaled historically is because tech players focus on a vertical and build a solution that's then reused, and everyone benefits from the standardization. At the moment, in the core banking areas and core insurance areas, there's a lot of stuff that's very specific to each organization. If I put that together, what you said there about the sort of funding gap, you could conclude that the banks themselves should be investing more to fill some of that gap, to see some of these solutions through, and maybe as you say in the report, give an exit by these owners, which is not a sort of hands-off exit, but they stay more involved. Do you think that's sound thinking, or do you think it's just not feasible? The banks will get more into the kind of VC world because that's just not what they do.
Yeah, I don't think it's about banks alone. I mean, I think there's a broader agenda here. You know, banks have got some seriously difficult things to do. You know, many of them are coping with legacy infrastructures. So as you all know, it's very hard for legacy infrastructures to kind of be broken out of and for additional spend, because they've got shareholders, they've got investors, they've got obligations they've got to meet, and they're playing to a very broad church. Where I think the opportunity tends to lie is finding ways to collaborate between incumbents, let's call them that, you know, large players, and the smaller ones, because the smaller ones typically have more agility, more flexibility to do certain things. But the big banks typically have got the regulator looking over their shoulder to say, don't make a mistake. So we've got to find a way to create an environment where the big players, the big banks, can find ways to work with the smaller, more agile organizations, but at the same time, not have the concern that if something goes wrong, there's going to be a problem on them, on the big players. So one of the suggestions is that we operate a scale box. So a scale box is basically taking the regulatory sandbox that we've currently got, which the FCA established and has done a fantastic job with, and find ways to take that to the next level in terms of next size of organization. And by doing that, what that will do is allow greater experimentation and potentially, I hope, partnerships and collaboration between small and large players, let's call them that, so that there's more opportunities to test, to try, run things without having a concern that something can go wrong and it's not in a controlled environment. So I think that's one example of how this is going to happen. But you know, big banks have got a big responsibility. They've got customers, they've got a significant number of customers, and the smaller players want to find ways to get to those customers. So they're trying to get access to distribution, and the big players, the big banks, are trying to find access to agility. So I think there's a potential marriage there on the basis that everybody is open-minded about how to make that work.
Since I've got you, I maybe just ask your opinion on my purpose point. I don't know if you heard the points I was making around purpose. Do you think that purpose and profit can coexist, or is that just something that would be nice to be the case, but ultimately Milton Friedman's right, and you just got to focus on making money?
Yeah, I'm a great fan of Friedman, but the reality is I think purpose really can exist with profit. They're not mutually exclusive, and actually I think if the pandemic has shone a light on many, many things, one of them is it's made people reflect on themselves, their businesses, and also their legacy in terms of what they're looking to do. So I think if you think about the financial services sector, we've seen sustainable finance take off over the last few years. People are now asking more of their money. They want social and environmental benefits alongside financial returns. The UK is third in the world behind US and China for investment into impact technology, as it's called, or impact tech, which has increased 160% since 2018. And in particular, I think fintech can play a significant role in increasing access to financial services for low-income households and SMEs. Despite priding ourselves as a global leader in financial services, financial inclusion remains a significant challenge for 21st century Britain. And around 1 million people don't have a bank account, and 12 million adults have little or no confidence in their ability to manage money. So technology, I think, can change this, can help this, and these changes have been in motion for several years. But as I said, COVID has been a game changer for adoption. And I think the pandemic has started to focus minds and create new opportunities for technology to enhance financial inclusion. It's interesting, in the first month of lockdown last year, around 6 million people, 12% of the adult population, downloaded a banking app for the very, very first time in their lives. And contactless or remote payments in the UK now make up something like 6 out of every 10 card transactions. So we've seen fintech firms respond to the crisis and accelerate tech products and solutions that I think are going to help the most affected. So I think this is a positive aspect. So to answer your question very simply, absolutely, purpose and profit can go together.
Ron, thank you so much for your time. It's been fascinating to have you in today. I think, as in all good podcasts, I should probably say, is there anything I should have asked?
No, I mean, I think the journey that we're all on in terms of fintech is an exciting one. I would be delighted if we don't call it fintech, but we just talk about it in terms of financial services. That's when I think we will all understand that both aspects of finance, technology, and financial services, as we call them now, have just come together in a fusion. That's where the opportunity lies, because it will create jobs, it will be at the heart of innovation, and I think more importantly, it will actually serve consumers better.
Thank you very much for your time today. It's been a great pleasure.
Thank you.
Well, that was fantastic. Thank you, Julian. Thank you, Ron. Accenture's lab is global, and as the chapter based in London, we were of course massively excited to read the Khalifa review as soon as it was published, and we are hugely grateful to you for spending your time with us here today directly. At Accenture, we completely believe in the future vitality of the UK's fintech ecosystem. We're excited to be part of it, and we want to start putting those proposals into practice over the next few years. So where do we go now? Well, let's head straight into our next set of fintech pitches for the day. We're going to be hearing from security and purpose.
Maintaining security means staying ahead of the curve in an ever-changing technology landscape. Security needs to be at the heart of how you pivot your organisation and absolutely central to all transformation plans. Hear from our founders. How has the accelerating pace of change underlined the need for new security solutions?
Hello, my name is Ty. I'm from Contingent.
I'm Yorgos, CEO of Elementa.
I'm Nodar Danelia, founder and co-CEO at Synth.
COVID is absolutely a sort of a seminal moment for organisations in terms of understanding the risk across their kind of wider security posture, but particularly across the third-party risk and supply chain element of their business.
Security needs human analysts to read intelligence reports about new threats, but there is a global shortage of analysts, and there's too many threats and reports to read, not enough time to process them. So we have to create and deploy new solutions for intelligent automation to keep these human defenders above water.
Well, one of the biggest challenges that we see at the moment is the shift to remote modes of work. This calls for a new generation of security and privacy solutions. Solutions that will help to ensure that the workforce can stay efficient whilst companies are protected and clients' data is secured.
What about your business? Is security central to how you transform?
Hi everyone, my name's Catherine and I am the sponsor for the security stream for the Fintech Lab. As you know, security is vital to all clients and in particular within the financial services industry. It's ever changing, always present, and so the need to prepare is both urgent and essential. The lab this year has been all about fostering new solutions to try and help our clients tackle some of the largest threats, and that could range from synthetic data all the way through to sovereign IDs. I'd like to introduce you to our first graduate of the day, and that is Nuggets, who again provide some lovely innovative solutions for you to look at. Thank you.
Hi everyone, I'm C. McKinder-Johnson. I'm co-founder and COO of Nuggets, and Nuggets is all about taking back control of your data. We absolutely believe that personal information should be owned and controlled by the individual, and that privacy is a fundamental human right. And the way data is stored today needs a fundamental shift. We've all seen the headlines. We all know that despite the billions spent on cybersecurity and fraud prevention, the data breaches are on the rise and the cost of fraud is increasing year on year. And also with regulations are tougher. And despite that, there's no let up. And the 2020s will be a record decade of data breaches. Also, something that's happened is that consumer and business sentiment has totally shifted, and privacy and security is now the number one priority for consumers, but also for businesses when they consume goods and services online. So at Nuggets, we've built a B2B2C platform. It's a verified self-sovereign identity and payment platform that once you onboard, essentially provides you with a verified self-sovereign identity. And that's if you're a consumer or if you're a business. And then we have three other solutions. We have solutions around access and control. So that's all that good stuff like logging in without a username and password, two-way verified communication with a call center. So instead of having to share your mother's maiden name or your first pet's name, they can just ping your digital identity. You know it's them, they know it's you, and you can start the conversation. We then have other solutions around payments. So that's omni-channel payments, the ability to pay with a debit or a credit card or a direct bank account payment without, again, sharing or storing any of that data with the merchant. And our fourth solutions are around secure documents, so the ability to disseminate the exact document that you need to, but again, without allowing the third party to share or store that document. Obviously, there's lots of use cases that come off combining a verified self-sovereign digital identity and a payment source, including the ability to onboard consumers, businesses, age verification. You know, the use cases are limitless. And our product now has been launched in the UK, in Europe, and also Australia, and we plan to launch in the US next year. And really the focus right now for the business is to commercialize and really scale all of the sales and marketing effort. And what we've been doing is we've signed our first few clients, organizations like LexisNexis Risk Solutions and a number of global payment service providers. And we're mapping out that journey in detail and understanding which value propositions are really landing. And really the focus for us in the short term and mid-term is to continue to commercialize the business and grow, and to become the ubiquitous platform that enables all individuals to take back control of their data, but whilst we secure rapid and low-cost defendable market share and entrench our technologies into category-leading partner clients and really fundamentally change the way data is stored today. Thank you.
The technology behind Nuggets has many use cases, but what is the most important and valuable for financial services?
Customer onboarding with a verified self-sovereign identity, and that can be across KYC, KYB. Organisation can really save time, money with an automated one-time onboarding process. And essentially Nuggets can keep that confidence level high, not just the moment you create that identity, but throughout its lifetime. Because when you think about the power of identity, actually one that comes with a transaction record is the highest level. And that's really super simple for us to achieve. You simply scan a government issued ID, you then do a moving selfie, and then you add a payment card, and that creates your self-sovereign digital identity and digital vault. So you can then really start to imagine that, you know, you can now log in with that, you can verify your ID with that. So we see that as you can provide that frictionless, seamless experience to users, but also ensure that their identity and data is held and controlled by them.
So thank you, Seema. That was fantastic. I'm sure everybody will agree that was an awesome solution if people are interested in that. I'd now like to pass you on to our second security fintech of the day, and that is Nithin and SQR.
Hi, I'm Nithin Thomas, and I'm the CEO and co-founder of SQR Systems. We built the Cirrus platform to provide organizations with a way to deploy security to enable communications more freely. We believe in empowering organizations to take control of their data and privacy on any application, platform, or infrastructure. With so many organizations supporting remote working and use of personal devices and applications in the workplace, it's become increasingly challenging for organizations to achieve effective security and compliance on an infrastructure that they effectively don't control. So Cirrus is a proven layer of security that can be integrated easily across an organization to ensure that there is consistency of security and compliance across all channels of communication. To achieve this, we have a number of different products. We have the Cirrus app, that's a free-to-use app for voice, video, and messaging with enterprise-grade security built in. Then there's Cirrus Enterprise, which provides all of the infrastructure for an organization to set up and run their own secure communication service that they control themselves. We then have the Cirrus SDK, an API product that allows new products to be built with security by design with minimal coding and development. And then the Cirrus Connectors product acts as a gateway to allow organizations to communicate over any channel like WhatsApp or Microsoft Teams or Wickr or SMS and so on, to enable users to choose an app of their choice while ensuring that the enterprise remains in control of their communications. And finally, the Cirrus Lens product takes the same principles of the rest of the Cirrus platform and it applies it to documents to protect them wherever they go. So using this capability, even if a document is stored in an unprotected device or sent over an unsecured channel, or even if it's printed and left in a train, for instance, you can completely control who has access to the data. Our vision for Cirrus is to make our security a part of the natural workflow in organizations so that we enable security by default rather than by exception. We're partnering with one of the largest smartphone manufacturers and one of the largest tech companies in the world to bring these capabilities to market. So this is the first step in building an ecosystem of products and services that support Cirrus encryption as part of the applications and devices that our consumers are already using on a daily basis. So this will allow us to improve the security and compliance for organizations while minimizing friction for our users who are free to continue using their favorite devices and applications without ever having to worry about security. And that's really our goal, to stop our users from ever having to think about security because we take care of it. The Fintech Innovation Lab has been really useful for our journey because when we started the program, we really had a lot of customers in defense and national security where we first built our technology to address some of the challenges in shifting huge volumes of data over unreliable and untrusted networks. But we didn't really understand how our solutions fit into the financial services sector, which was a bit of an alien world for us. But we knew that we could solve some of these tough challenges, but we needed a bit of help with how to position our product. We couldn't talk the talk. So through the program, we understood how to position our product using the language specific to the financial services industry. We refined our strategy and understood the importance of solving the distribution problem, and through some really important commercial partnerships to help us deliver our capability at global scale. We've also identified a number of new use cases which were previously unknown to us. An example of this is when using this technology for contractors working in a bank. So by encrypting documents using the Cirrus capability, when a contractor leaves the bank, the organization can be absolutely sure that they are able to revoke access to the sensitive data that the contractor might be in possession of. So this was a really important use case that we had no idea about when we first started the program. The relationship with Accenture has been invaluable to us to better understand all of these areas. The depth of knowledge and the resources that Accenture are able to provide are unmatched in any other program that I'm aware of. And the program also has a fantastic network of mentors that have helped us refine our product messaging and use language that's more targeted for financial services, as well as provide valuable guidance on our wider strategy for growth. The most valuable outcome for us from the program has been around the interactions with the partner financial institutions that have enabled us to take a concept and build a strong product roadmap, including an understanding of key integrations that we need to make our platform more relevant for the needs of the financial institutions. Companies would normally spend a fortune on business development to get this kind of access, and the lab has given this to us in a very structured and curated way. So we're going to take all of the learnings from this particular program over the last couple of months and build Cirrus to be an even better platform by making it easier for users to stay secure and for enterprises to deploy consistent security across their organization. We're SQR Systems, and we built the Cirrus platform. Thanks for listening.
Thanks. And why do you think protecting multi-channel security is something that the financial institutions will have on their worry list right now?
So financial institutions are increasingly focused on customer service and digital experience as a way of attracting more digital natives. Most organizations are already embracing next-generation contact centers to provide a frictionless experience to service customers on apps and services that they're already familiar with. So this includes things like enabling customer contact centers to talk to their customers over things like WhatsApp, so that you're minimizing the amount of friction that you're putting the users through. So speaking to your customers wherever they are can not only improve your customer satisfaction, but can actually lower your own contact center costs by as much as 30%. So with such an obvious benefit to multi-channel communications, many organizations are embracing these new technologies, but it often leads to a fragmented security posture. While consumer apps are great for delivering a very personal experience, you often lose control of the data on third-party platforms. The robust security protocols that these highly regulated institutions have put in place are often compromised by reliance on third-party channels that are often not as robust. Add to that the changing nature of staff communications, where working remotely, often using personal devices and software built for ease of use over security, and you end up with gaps in your organization's security. So by investing into a multi-channel approach to security, financial institutions can ensure they continue to support an omni-channel communications experience and minimize friction for their staff and customers, but at the same time ensure that they stay compliant and secure by having a single layer of security that they control whatever channel of communications their users are on.
Thank you, Nathan. I thoroughly enjoyed that, and I'm sure the audience did too. So, all right, everyone, from security, it's a wrap. I hope you feel as inspired as I do with all of the innovative solutions that you've seen throughout the lab. I'm now going to hand off to the next stream, and that is purpose. Thank you for your time.
Purpose is key to the relationship between financial institutions, consumers, and society. Fintechs increasingly sit at the heart of the sector and are bringing challenge to financial institutions already considering their purpose and how best to articulate it. Hear from our founders. What does purpose really mean to you?
Hi, I'm Pierre and I head up partnerships at Percent.
Hey everybody, my name is Amon. I'm the co-founder and CEO at Fellows.
Purpose for me is about businesses realizing that they have both a responsibility as well as an incentive to align their goals with the interests of the people and the places that they affect. It's not one size fits all, and so it's for all businesses, and we make it as easy as possible for our partners to build purpose into what they do.
For us, purpose means that we as a team are building something that will truly have an impact on society and on those in need. It's what allows us to think differently about a problem that is nowadays shared by more people than ever. We're seeing that many households and small businesses are struggling financially as an outcome of the pandemic. So what better purpose can there be than to help those in financial need get out of debt? Ophelos is Greek, and it means to help.
What about your organisation? What does purpose mean to you in practice?
Hi everyone, my name is Kim and I am the sponsor for the Purpose-Driven stream this year. Purpose is becoming an increasingly important topic as customers believe that companies need to think about their role about doing good and shaping society and not just purely looking at it from a financial results perspective. The participants in the lab this year has been all about fostering innovation and new solutions to help us tackle some of the world's largest problems, ranging from the sustainability agenda to helping customers improve their overall financial well-being. I'd like to introduce our first grad fintech, Zeti.
Hi, I'm Dan Saunders, founder and CEO of Zeti. And at Zeti, we're revolutionising transport finance to deliver sustainable outcomes by leveraging the power of real-time data. Transport is undergoing a paradigm shift globally. We're moving away from individual ownership of vehicles to instead utilising transport on demand. and vehicle technology is changing. We're transitioning from combustion engine vehicles to zero-emission vehicles, which are becoming increasingly connected. Globally, vehicle financing is a $1 trillion a year annual market, but is facing major challenges. Financiers have received poor risk-adjusted returns, and borrowers seek flexible payment terms to support their cash flow. Zeti has developed a solution to overcome these challenges. Zeti sits at the intersection of fintech, mobility, and sustainability, providing a digital platform which uses real-time utilization and data to enable efficient, scalable financing of sustainable transport. Specifically, we do three things. We improve returns to financiers, we improve cash flow and transparency for borrowers, and we accelerate the adoption of clean vehicles to improve air quality. Zeti's vision is to be the preeminent financing platform to accelerate the adoption of sustainable transport, and we will do this by reducing the friction and margin erosion caused by physical intermediaries, by leveraging technology so that financiers of assets receive a better risk-adjusted return, whilst also providing borrowers with a pay-as-you-use finance to maximise their cash flow at no extra cost. So whilst this may seem like a bold vision, we're on our way. We're already financed £10 million worth of electric vehicles for commercial applications, achieving a significant positive environmental impact. But more importantly, we've received more than 200 million of financing demand from borrowers without undertaking any marketing, and signed partnership agreements with major mobility organisations both in Europe and the USA. The Fintech Innovation Lab has taught us three valuable lessons. Firstly, before the lab, our articulation was poor. We were talking about pay-per-mile EV financing to now talking about revolutionising transport finance for good using real-time data. Secondly, Zeti is not just a financing platform. We're creating the potential for a new ESG asset class in sustainable transport, and many parallels exist with renewable energy investments, which also generate a yield from the utilisation of those green assets. And finally, the feedback we've received from financial institutions is that there is demand for digitally connected asset finance. And this has validated our hypothesis that what we're building is of demand for financial institutions, as well as the opportunity to finance non-transport related assets and infrastructure in the future. So we're Zeti, a small startup with big ambitions to revolutionise the world of transport finance for good. Thank you for listening to our story.
What do you think are your biggest hurdles in achieving your vision, and how do you think you'll get around them?
The greatest hurdle Zeti faces is in convincing financial institutions that there is a better way to finance assets, and that traditional fixed repayment debt model is outdated. Transport is increasingly being seen as a utility that is accessed by users on demand, and therefore the associated financing of vehicles will need to address payment flexibility. Incumbent providers of vehicle finance are dependent on rigid processes, the IT systems, the sources of primary capital, and the way they've operated up till now. And frankly, the returns in recent years have been pretty poor. So these legacy ways of working cannot accommodate flexibility in payment timing, which is demanded. Displacing this antiquated financing model is Zeti's challenge, but also provides Zeti with the opportunity to build a moat around our technology. And by doing so, we can attract more sources of primary capital by improving the risk-adjusted returns, whilst also giving a better user experience to borrowers. Zeti is demonstrating this with our first investments, generating risk-adjusted returns, which are actually above the market norm. Specifically, by leveraging the value of real-time operational data, we're able to provide a greater value to both the financier and the end user of the vehicles. So as Zeti continues to grow, I expect the early sources of primary capital to be from alternative investment institutions. However, as our track record develops, I'm confident we will attract further capital from traditional sources wanting to work with or license our technology.
Thank you, Dan. That was great. I'd now like to pass on to our second purpose fintech for the day, Vested Impact.
Hi, my name is Kim. I'm the CEO and founder of Vested Impact. Vested began a few years ago from my previous experience where I was hired by the United Nations to build for them a platform that could assess the impact of the $8 billion peacekeeping operations. It was through doing this work, understanding how we can change the way we define the value of an investment, that I realized the UN may have an $8 billion problem, but the capital markets has a $25 trillion problem or opportunity to change finance, to finance change. I think we all know the world is changing right now. We're on the cusp of a generation and a society that cares more than it ever has. And what this has led to is an estimated $25 trillion that has been waiting and is indicated to be invested in impact. But the problem is this money is waiting. It's not actually being allocated yet. And the key thing holding it back is the fact that financial advisors, wealth and asset managers cannot tell their clients what is the impact their money is going to have and how do they know it's so. So we created Vested to solve this problem. Vested is a platform that assesses the impact of a company's products and services on their contribution to solving the world's greatest problems. Now, when we say world's greatest problems, we mean the United Nations Sustainable Development Goals, meaning we can assess everything from climate to gender to food security or health. And what this enables us to do is we're different from ESG that looks at how well a company is managed. We look at how well a company and their products and services are helping make the world a better place. So how does Vested work? Vested takes in a bunch of company data. What we really look at is we have 100 million impact data points. This is data from the UN, the World Bank, the OECD, that we are essentially bringing a whole new class of data to finance. We pull it into our proprietary algorithm, which is best practice on how to measure impact, backed by independent and objective data. Our system handles the complexity and outputs it into some simple metrics and some detailed reports that can be consumed through our API or our software as a service platform. Impact is a long-term game, so is investing. Vested is built to help financial institutions on every step of the way. At our basic sense, Vested helps answer those fundamental questions and communicate with simple metrics. What is the quality of the impact of an asset? What is it impacting? And using our proprietary lives value, we can tell a client and investor how many human lives are significantly impacted by that investment. Now, for investors that say, well, what does that mean? Or for financial and asset managers required to disclose on SFDR regulations, we have those detailed metrics and reports to underpin those base impact data points. And then, of course, for those that want to redefine new products based on impact, Vested can help with that as well. Our aim at Vested is ultimately to unlock that $25 trillion for asset and wealth managers, because by unlocking that $25 trillion, we can ensure that it goes to the companies that are genuinely making the world a better place. And that helps us achieve our vision, as well as helping our clients achieve theirs. The Fintech Innovation Lab has really helped us drive where we're wanting to go. For us at Vested, we want to be the key people that help people understand what is the impact that they're having. So the Innovation Lab has helped us articulate exactly what our value proposition is, but also an understanding of how we need to help our clients articulate that to their end users. Because money doesn't change the world, the people that spend it do. So it's really important to us that our metrics engage with everyday users. Our vision is to be the best of what we do, which means Vested and impact is inherently complex, but the lab has really helped us simplify both our product offering, but where it's able to benefit and add the most value to financial institutions at every step of the way. We say at Vested, we want to change the world. And to do that, we can't do it alone. And we do that by working with some of the biggest institutions. And the lab has helped us with not just introductions to these institutions, but a really good understanding of how they work and how we would be required to work with them in partnership so we can all drive this change. Our mission at Vested is to redefine millionaire, to be a person who impacts millions of lives. We do that through helping communicate impact. And by doing that, we can change finance, which will finance change. Thank you.
So is there an appetite for making this data available for retail investors?
Absolutely. Money doesn't get to decide if it's invested in companies that are bad for the planet or good ones. It's ultimately financial institutions, but it's actually their clients and everyday retail people that demand this of the financial institutions that really decide where money goes and that it changes the world. We built Vested from the start to actually address this with our proprietary lives measure, which is a measure of human lives. It was built to enable everyday investors to compare how much impact their money's having and where. At the moment, we found the majority of people still turn to a financial advisor or an institution. So it's a responsible move from us to first equip those giving the advice on how to understand impact in the first instance. But as the world and society increasingly demands impact and people become more comfortable with non-financial factors around their money, our ultimate goal is absolutely to empower everyday people to use this information to make their own decisions on how they want their money to matter. Every person can have an impact score for every dollar they invest or spend, and making money becomes not just about the financial value they receive, but the social value they create as well.
That was awesome, Kim. Now, I would like to pass on to the final Purpose FinTech for the day, Kogo.
Hi, I'm Emma Kisby. I'm Managing Director of Kogo. I've come from a background of helping businesses like Sainsbury's leverage customer data analytics, and I've seen firsthand the power of data in influencing consumer behaviour. And this is why I've been on a personal mission for using this data for good, and which is why I also joined Kogo. Hopefully, I really don't need to convince you about the climate crisis. Barack Obama said we're the first generation to really feel the effects of climate change, but we're also the last generation to do something about it. The good news is we have really seen a tidal wave of change. There are a number of growing commitments from governments to big businesses making really bold and ambitious statements like NatWest here, making a very public commitment to leading the UK to a low carbon economy. And others, like Brewdog, who've maybe taken a bit of a less PC approach. And what we're seeing is that consumers are increasingly looking to businesses for solutions. According to a survey by Accenture, 62% of the UK population are looking for companies for help on ethical issues. And this is even higher in the younger generation. But the challenge is it can be really confusing. There are all these terms like carbon neutral, carbon negative, net zero. In fact, there was an article in Forbes this week saying that 64% of the UK population don't even understand the concept of net zero. But we're increasingly hearing people want to make a difference, but they don't know how, and climate anxiety is really on the increase. But this is where Kogo steps in. We make ethical living easy, and we do this by helping consumers express their values through their spend. So we've got an app, it's underpinned by open banking, and users can simply link their bank account, and we have access to over 35 different banks and credit cards, and they share their values about what matters most to them across social and environmental issues, and we help them to see their own impact. The way that we actually measure the impact of user spend is through what we call a good impact framework. We effectively match spend against business data aggregated from over 120 different accreditation partners, so people like the Living Wage or Carbon Trust, Social Enterprise, into 12 simple core consumer values. And on top of that, we have a real-time carbon footprint tracker. So we've used UK-specific carbon emissions data that generated by Leeds University, used by the UK government and WWF. And we've designed it with Mike Berners-Lee, who's a leading carbon expert in the UK. And this gives users a really highly personalised carbon footprint in real time based on their everyday spend. But importantly, it's not just about tracking. What it's also about is taking action. So we help users discover and switch to businesses who match their values. We give people ethical nudges in real time. So for example, if we see an energy spend, we can tell them how much carbon they would have saved by switching to a 100% renewable green energy supplier. And finally, we enable users to offset their monthly carbon emissions. We work with some amazing experts. I've already mentioned Mike Berners-Lee, but we work with another guy, Owain Service, who set up the nudge unit for Number 10. He's an ethical nudge specialist. And we also work with Mike Barry, who's like the grandfather of sustainability, although I'm not sure he'll thank me for saying that. So our vision is simple, but it's mighty. We want to change the world for good. And the way we want to do that is by empowering millions of consumers to express their values through their spend. We also want to work with value-aligned businesses, so people like NatWest and Westpac, where we're helping to bring scale and impact to their customer base. We have had an amazing time on the Fintech Innovation Lab, and there's probably 3 key areas that we've really benefited from. Firstly, it's really helped us turbocharge our pitch. We've refined our proposition to be really simple and easy to digest. I keep saying we make ethical living easy. We help users to express their values through their spend. The second big area is it's really helped us focus on our priorities for scaling up. Everything from pricing to resourcing at the right speed to the importance of getting kind of culture and values right. And we've had invaluable insights from people who've been there and done it. And we've taken these away and really applied them to Kogo. And finally, when we started this whole process, Celine said this is going to be like 12 months of business development in 12 weeks. And it really has been. We've met so many different financial institutions. But importantly, it's also connected us with the right people, as well as had this enormous opportunity to network with other fintechs, sharing in exactly the same challenges that we're facing. It has been a significant investment in time, but I have to say it's been worth every single minute. So thank you so much.
Carbon tracking is a really hot space these days. What is Kogo's moat?
Well, it's brilliant that this is a hot space, but also it's a bit depressing, isn't it? And it's taken quite a long time to get to this point. Ben, our founder, is actually a climate economist. He set up Kogo originally as a charity over 10 years ago, all with the ambition to use data and tech to address systemic change. So the big advantage that Kogo have got is we've got all these unique consumer insights on ethical spending, and we've also got amazing experience working with leading experts. There's 3 things that I'd really like to pull out about Kogo. One is we work with the most granular carbon data set in market, and we work with the leading experts. So in the UK, for example, we use the same data set provided by Leeds University, which is used by the UK government, and we work with Mike Berners-Lee. The second bit is it's not just about carbon tracking. It's not enough. It's about taking action and making impact, which is why a key USP for Kogo is that we've modelled a series of actions and recommendations that can reduce your carbon footprint. But most importantly, we can feed that impact back to users to create sustained behavioural change. And we've worked with the Wine Service, who's an ethical nudge specialist, on these feedback loops. And finally, we also know that solving the climate crisis isn't just about carbon. The climate crisis is intrinsically linked to social impact. Plus, we also know that consumers most care about what is personal to them. So we actually look beyond carbon and we look at things like living wage or social enterprise. And we've got great plans to grow into new areas like things like plastics footprint, for example.
Thank you all for the fantastic presentation. I truly believe that purpose-driven will become the forefront in the world in the future, and fintech will be at the forefront of it. I hope you all have enjoyed looking at the purpose-driven fintechs. You'll be able to explore them more during the expo session. Now, back to you, Graham.
Fantastic, Kim. Thank you very much. And thank you to our second set of founders. So there you have it, everyone. That is 9 fintech pitches from graduation day. But remember, that is just the tip of the iceberg. You can go and meet them and the other 11 fintechs and hear their pitches too in the expo at the end of the event today. Before then, though, don't go anywhere. We have now got our final keynote speaker. This is where I hand over to Mark Mullen, CEO of Atom Bank, so we can hear his founder's story. Over to you, Mark.
Hello, everyone. My name is Mark, and I'm the Chief Executive and one of the co-founders of Atom Bank, and I am delighted to join you on this year's graduation day. I am, of course, recording this a few days in advance, but that's the nature of the world we're living in. On the other hand, I'm doing it from the room in which we actually founded the bank that I now run. I have a great privilege of running it, in 2014, in April of 2014. So that's, getting on for 7 years ago, which is frankly a lifetime in fintech, let's be honest. I want to spend a little bit of time talking to you about Atom, tell you something about the business that we've built, but probably more importantly, to give you a bit of a description of how I got here, what keeps me going right now, and what I think the future holds for us. So firstly, Atom. Atom's based in Durham. And we are both the biggest and the smallest bank in Durham simultaneously and at the same time. We're very proud of that. We employ about 430 people. We are predominantly a lending and savings bank, so we offer residential mortgage loans and we offer SME loans. And we also offer consumer deposits, so fixed rate savings, instant access savings, mostly done via apps. We've got a very modern technology stack. It's running in GCP, Google's cloud platform, down to a core of, if you like, cloud-native banking software provided by Thought Machine. We have our own engineering team. We employ about 150 people in change and technology. And we architect and engineer from the top to the bottom of the stack. So, it's a pretty sophisticated, I guess, engineering community in Atom. But we also work with partners, literally hundreds of partners, including Accenture as it happens, both to build and run the platform that we use to provide our services. And then that sits within a bank. And so it truly is a fintech. It's very largely, if you like, designed and led from a mechanistic or customer experience point of view by the technology team. But we also have got a very sophisticated finance and treasury team. We've completed 3 securitizations, getting on for £2 billion alone securitized. We run maturity transformation across a £2.4 billion savings book. We're just getting on to £1 billion of residential mortgages on balance sheet. We've got another 2.4 off. We'll probably getting on for 700 to 800 million pounds of SME loans in the current financial year, which ends at the 31st of March. So, there's a lot going on in this business in the sense that it truly is a proper bank, albeit really, really small in the context of banking, where frankly £1 billion is nothing, let's be honest. But it's also a substantial technology company. It's an expensive beast, so it costs us over 40 million quid a year to run it, which, trust me, keeps me awake at night. And we're not profitable yet. We are looking to stop burning equity capital sometime around August this year, and we'll get to break even, we think, in February next year, maybe a little sooner, depending upon economic outlook and provision levels. So we're kind of within touching distance, but it's been quite a long journey to get here. We've, if you like, taken some detours along the way. But we truly believe in our business, and we believe in the basic philosophy that got us here. So why did we build what we built? Well, we built Atom because we believe that there's an opportunity right smack in the heart of UK banking. And that opportunity arises from 2 things, one of which is big banks, some of whom might be in the room, are a bit variable in terms of how well they serve their customers. And you can see that in their Trustpilot ratings, and you can see it in their Net Promoter scores. At the same time, they're also quite expensive to run. So if you think ours is an expensive business to run, it's really, really tiny compared to the cost efficiency ratios of some of the big banks. And they're struggling to overcome some of their legacy technology issues, their legacy distribution issues. And generally, we think you can do an awful lot better. And so that's ultimately how we translate our vision into a value proposition. We want to be faster, we want to be easier, and we want to be cheaper. Because at the end of the day, it's money. And the value of the money, therefore, can be passed on directly to the customer. And that's why we try and do things as inexpensively as we can. So there's a real grit and focus and discipline to Atom. We love the technology, we love what we do, but it's really got a focal point. It's got a means to an end, if you like, raison d'etre in our business. And it works, right? We've got very high NPS scores, so it ranges between 74 and 86, I think is the highest we've achieved. We've got very strong employee engagement. Our App Store ratings are above 4.5. Our review ratings typically above 9. So in terms of customer experience, we do well. We've always got room for improvement. And then in terms of revenue and profit growth, we're on track, as I said, to break even. And we think we can get to a cost efficiency ratio of somewhere about 20%, maybe even dip below it. And a cost asset ratio that frankly is about 30 to 35 basis points. And that's very, very competitive when you compare, if you like, banks in general. I'm here because I left a great job. I left the job as Chief Executive Officer of First Direct, which for many people would have been a dream job. It's a fabulous brand. It's a great team. It's based in Leeds. And I had spent 30 years in banking by the time I got that job. And I loved every day of it, to be honest with you, right up until the point where the business cases that we had approved for investment in that business were overturned. And instead of just putting up with it, I decided to do something about it. And ironically, the action taken was to go build a different bank, go build a new one, which is not obvious. But oftentimes when you're pursuing a career, it's very easy to think that the place you are is somehow or the other more secure than the place you might go. And that's a myth, because the banking industry that I've grown up with since 1989, when I joined from university, I joined Midland Bank, has been in a resizing, shrinking, frankly, form ever since. It's been adapting to new technologies, it's been adapting to new behaviors, it's been shrinking its branch network, reducing its telephone contact center networks, and ultimately trying to rescale its business models all the years I've worked in it. So it's sort of delusional to think that you're in a safe haven, and you've always got to be looking at opportunities. It's been my experience that most entrepreneurs are angry about something, something that they didn't get when they were young, or some wrong that happened, or some injustice that they really want to do something about. And two things happened to me, one of which is I got closer to 50, which is a bit scary. I'm frankly well past that now, but at the time, the prospect of not having tried something radical, of not having pushed myself, was scarier than the prospect of actually leaping. And so I became an entrepreneur at 45, right, which is not really what happens. Usually it's like teenager or 20-somethings. But if for all of you who may be thinking that it's not possible, it is. Yeah, at 45 you can still go and try something radical and new, as long as you know it can go horribly wrong. And there is a truth in that, right? So just because it hasn't gone horribly wrong yet, doesn't mean it can't. These businesses are very difficult to build. They're very, if you like, volatile, certainly in early stage. And you've got to be able to ride the ups and downs. It's like being strapped into a roller coaster. And it's great fun at times, but it's bloody scary at other times. And the thing is, you just can't get off. And that roller coaster is still running, actually, because we're still raising capital. It's still a very fast-changing world. We got our banking license on the day that Britain voted to leave the European Union. And one of our biggest investors is a big European bank. I mean, you couldn't make it up. We have built our business in a time of, unprecedented quantitative easing, which has blown margins to kingdom come in mortgage lending, and when we've seen the effects of ring fencing. We've built our business in the midst of COVID-19. I mean, it's like a Lemony Snicket series of unfortunate events. As I said, you just couldn't write this book. But we've got 430 people. We're a hugely engaged and motivated and excited bunch. We're massively optimistic, because if you can't bring optimism to a startup, a fintech, then I think you're going to find it a bit of a struggle. And we still think that we're nowhere near finished, that we haven't even begun to tap the potential of this business and this business model, that we're very passionate about where we built it. It would probably have been easier to have built it in London or the Southeast, and that the journey actually is as exciting, frankly, as the destination, because the destination's further apart or further away now than I think it was when we started this. We were naive and optimistic that somehow or the other in 3 years it'd all be built. 7 years and it's not all built. But then we're in an industry of dinosaurs, and I don't mean that word as pejoratively as it sounds. This is an industry where businesses live a long time. And in that context, a 7-year-old bank, and we've only had a banking license for 4 of those years, is just a minnow. So, a few final thoughts. I was very struck by the images from NASA, one of my favorite brands and one of my favorite companies in the whole planet, frankly, beamed live a few weeks ago, where the parachute for the new Mars lander opened. And apparently it was made in the UK. And of course it contained, I guess, an Easter egg, a message. And that message was "Dare Mighty Things," which I just think was an absolutely awesome idea. I commend it to you, not because building fintechs is necessarily easy or guaranteed to succeed, but that the whole process of building a team, of creating something from, literally the paper clip to whatever you happen to wherever you happen to get to, is probably the most energizing experience of any life or any career. So I hope you have a great day. I hope you've had a great experience, and I wish you the very, very best of good fortune in your future endeavors. And thank you for watching. Take care. Bye-bye.
Oh, I love that. Thank you so much, Mark. What a great talk for our fintechs and the audience here today. So with that, thank you to all of our brilliant speakers and thank you all for joining. As you can tell, we're absolutely passionate about fintech here at Accenture, and we're looking forward to seeing this cohort really fly. Hopefully, with a few future partners in this audience here today. So with that, and with one last fintech treat for you, it's now time to get mingling. Simply click the Expo link over on the left-hand panel there, and you can head into the Expo area. You can chat to the fintechs, you can dig a little deeper into their propositions. Go and have a great time. Alternatively, if you really have to shoot off, and here's the treat for staying on to the end, you could always book a meeting with the fintechs. You can do that by clicking the fintech microsite link that you can see at the bottom, and they can follow up with you afterwards. You can, of course, check out the lab online too. On Twitter, on LinkedIn, we can continue the conversation there. But do take the opportunity to get engaged in that expo. The fintechs are there right now. They'd love to hear from you. Go and get stuck in. Thank you for your valued engagement with the FinTech Lab overall. That's it for us here on the main stage. Go and enjoy the expo. Have a great evening. Thank you very much, everyone.